Hello and welcome to the LSR Weekly View. Now, we were always clear that Brexit risks would not be limited to sterling or sterling denominated assets, but would be felt across the euro area. And indeed, financial conditions have tightened in most European countries, but in most of these countries, including the UK, the change isn't material and isn't enough to really impact macroeconomic conditions. The one exception to this is potentially Italy. Now, concerns about the Italian banking sector are of course nothing new. Previously, we have estimated that non-performing loans, or NPLs, of Italian banks are somewhere around 210 to 360 billion euros, depending on exactly how you classify an NPL, but that's around 20% of Italian GDP. So these are very significant numbers. Now, Brexit has worsened the situation for Italian banks in two crucial aspects. First of all, and more generically, it's convinced investors that interest rates will need to be lower and for longer than they thought before the outcome of the vote, and that obviously hits all bank earnings, including Italian banks' earnings. And then also it adds a risk premium to European bank stock and bonds that previously wasn't there, on the risk that some country in the future potentially follows the UK out of the EU or out of the euro area. Now, that political risk, unfortunately, is also greatest in Italy. The Italian government has scheduled its own referendum for October this year. This will be on constitutional reform in Italy, but Prime Minister Matteo Renzi has made it clear that he intends to follow the example of British Prime Minister David Cameron and resign in the event of losing that referendum. Now, this means that the ability to follow the EU's bail-in rules on bank rescues is very limited. Around half of Italian bank bonds are held by domestic retail investors in Italy, and so following those bail-in rules would effectively be an act of political suicide by the Italian government. So it's clear what needs to happen. There needs to be some sort of fudge of the rules by EU policymakers. We think that will happen, that Italian bank stocks will recover from their current nadir. If you want to know more about the Brexit risks posed in the euro area, then click below and we will see you next week. Thank you.